Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast and analysis of the week starting from 3rd until the 8th of November 2019. This is a great time to say happy November to everyone. Normally a wonderful month in terms of trading, great opportunities in average appear during these months, so I'm definitely looking forward for an exciting trading months. And before I dig deeper with all the trading opportunities for this week, I would like to take the chance and to invite all those of you who are new to the channel and watch this video for the first time and my work for the first time. I would like to invite you to subscribe to the channel. Just follow the subscribe button below the video and remember to enable the ring notification so you are notified when I upload a new video for you. Leave your comment if you find this video educational, useful and helpful, and if you enjoy the trading ideas. Feel free to share the video with anyone who you wish. This is completely open and free for the community. I would also like to invite you to join my live free Telegram channel. And when I say live free Telegram channel, that means active Telegram channel, completely for free. We are uploading there daily content, trading ideas, trading setups, blog posts, articles, educational videos, and much more. To join us, just follow the link below in the description. And I would also like to invite you to join my live trading rooms, where we go live over all the setups day after day, backing it up with full detailed trading reports day after day. So if you would like to explore all the trading opportunities that we have, join us in tradersacademyclub.com. You can find the link right below the video or right now on the right top corner of the video. So let's start. As always, the first thing we do is reviewing the previous week to see what worked, what failed, and what is still relevant for us for the coming week, updating and upgrading and exposing to new trading opportunities that we have. On Monday, I published the text format for the weekly forecast. So come to the blog VladimirRibakov.com, and on Monday you would find this article ready for you. Or just come back to the video, and in the description and in the comments you would find a direct link to this post. So let's start and see what did we have from previous week. We had a lot of interesting opportunities. The first one was the Euro versus the Kiwi. Because of the way that the daily structure was building up, our idea was sell the rallies. And the way we wanted to see that was the rally and basically retrace and starting to look for sells. And let's take a look how it worked. Here we are. So we started, right? We got this rally. It was presented on the 1 hour chart, so let's take a look how it looks like. Okay, we got this rally and we got a wonderful drop since then. So that brings us to the question, what's next with this pair after it delivered during this week? What's next? According to the daily time frame, we are still in the bearish pressure of the triple cycle with the bearish divergence on the MACD indicator. That means we are in the corrective cycle. Corrective cycle could be in two waves. Corrective cycle could continue within a range. This or other way around, I still think that sell the rallies is still the correct plan. Dropping to the 4 hour chart, we currently face a bullish divergence on these two waves, which could bring some corrections and a sell. The corrections could be tiny and straight continuation, or the corrections could be deeper to the top of the range and then the sell. The best way to deal with that is to drop to the 1 hour chart and to find opportunities there. For example, if we get here the two waves and a breakout, or alternatively if this becomes as a trending cycle by itself, then what we will want to see is false breakout and lower lows, and that would ideally provide us the sell opportunity. So my personal view here is sell the rallies yet, and yes, on the short view it could provide these short-term opportunities. But for longer runs, sell the rallies is what I would be interested in as for now. Let me know, what do you think about it? Are you bullish? Are you bearish? And leave a comment below in the comment section. Let me know, how do you see this pair? Our next one on the list was the New Zealandian dollar. With these two waves, we expected a bullish hidden divergence. It was building up, as you can see here. Our expectation was to see the pair continues to the upside with the bullish hidden divergence and the break of the trend line. So let's take a look on this pair and see what did happen here. A bullish hidden divergence created, turned to the upside. The MACD started to point bullish again, and the rest is history. We also brought the trend line and got the beautiful rally. Now the question is, what's next with this pair? According to the weekly cycle of this triple drop, we still have the room to go further. If the weekly is developing this way, the daily should develop the legs into the correction. That's exactly what happens currently. Once this would become a divergence, I would expect some corrective cycle to happen to the downside and then further continuation. That means that on the 4-hour chart, we can drop the Fibonacci expansion to find some powerful zones. And this is our critical area for the New Zealandian dollar, where we could expect some corrections. Corrections could be into waves, corrections could be in range, right? And basically after that, looking for the buys. Continuation. So the view for the New Zealandian dollar is we expect drops to happen from the current zone or slightly higher. Ideally, it would be from here, closer to the 0.65, right? So we can see that dancing during the week, making the correction, and then further buys. That's our plan for longer run by retraces. So my view is short term, looking for this topping conditions for possible sells. From again, ideally slightly higher here, right? And then looking for the buy opportunities. Let me know, how do you see this pair, and are you bullish or bearish, and where would you expect it to go? And by the way, a very interesting statistical information we can gain from the Forex crystal ball, that the 4 and the 6 of the months basically this week are pretty popular top days. So we can see that resisting in the beginning of the week and providing the drop down to this rising channel before the future buys. And the best buys days to be looking for would be the buys here on the week after. So retraces and the buys. So we will see how that follows. Of course, first of all the price movement, only then all the helpful indicators. So let me know what you think about it in the comments below. And also I would like to ask your assistance and support back. If you enjoy the ideas and the work that is done for you here in the video, please hit the like button below the video. Drop some feedback in the comment section. Your help is much appreciated and would help to the video and the channel. And I would like to thank you in advance for making the help. Next pair on our list was the Australian versus the dollar. Two waves and breakout, or a bullish divergence to form, and then with this trend line to go and continue higher inside this channel. So what we were facing on the Australian dollar, it's basically the divergence creation here, continuing divergence. Also, it all started from a bullish hidden divergence that then turned to be like bottom with this turnaround. I was expecting potentially 2 waves here with the breakout. That never happened. And basically what did happen is on a lower time frame we started to gain a bullish structure, and then all the rest is history. What's next with this pair? Going back to the weekly, it's still bullish. Daily is still bullish. And like the New Zealand dollar, I believe it's forming the structure first of all. So buy retraces would be yet the plan. I do think we will face some resistance here. We have very strong meeting points of trend lines and the 200 moving average, and very close to the psychological area of 70, and the bearish divergence on the daily time frame, and a bearish divergence building up on the 4-hour chart as well. It's already there on the moving averages. We might see there some attempts for false breakouts and spikes here for divergence, but I do think that as close as we get to the 070, this area would become critical. We should see some corrective cycle. Corrective cycle could be in 2 waves. Corrective cycle could be a range. Should be deeper because it's in a triple cycle structure. So I do expect a correction down here, and should be pretty massive. And then once happened, we are bullish again. So the way I see that on the Australian dollar, it's like with the New Zealandians, we should see some drops before the buys. Next pair on the list was the Aussie Kiwi, where we had 2 options there. First one, if we break below this trend line, we should continue lower. Second, if we break through the falling trend line, we should buy retraces. So what happened with this pair is we broke the trend line, we gained the structure, and buy retraces delivered. Delivered until when? Delivered until it created a bearish divergence. And what happens with this pair right now? Well, the way I see that, we are in contradiction. Weekly, still bullish. Daily, bearish. Double top, bearish divergence. Strong resistance, bearish divergence. 4-hour, bullish hidden. Every single time frame shows something different. This is the times where it's called a contradiction, and that's the times where I go to neutral. So this pair is for now removed from the watch list. Euro versus the dollar. Wanted to see the bottom created on the 4-hour chart, and we start the rally here to turn around, bullish divergence, and to fly. So where do we stand with the euro dollar? We really bottomed here. A divergence came in play, first of all here, then here on this double bottom. All that was holding in this beautiful zone, and it's slightly above the psychological 110. Basically what we got was the bullish structure and 2 waves correction. Also the trend line was broken. So what happens now? I believe this is the first part of the rally. I do think we are forming a short exactly like with the New Zealand dollar and the Australian dollar. First structures on the top. This should be the place where we would face some sells. Massive resistance zone, as we can see here on all this area. Right? The trend line from the bottoms seems to try and break. Sorry, bad drawing here. Seems to try and break out, so definitely can go and start the retesting or even dig deeper than that. The way it should behave, the 4-hour chart should fit in the daily. So if the daily is a cycle, then this would have to be first leg, then the second leg, then the third leg, each of them to become cycles. This would have to build as a divergence, and once this become a bearish divergence, that will be the time that we should start looking for possible sells. Short term, as I believe that longer run, we should face something like that. Too early to judge, of course, as for now. Quick observation of the statistical part will also teach us that the first day of the month, 3rd to 6th, are critical days for the possible correction. Correction could be into waves range. Correction as well is a possibility. Now I would like to show you a very interesting combination how these rallies on the short term and the reversal on the longer term could look like on the new creation that I released, new upgrade to one of my systems, the SRS Trend Rider. So the latest version is the SRS Pro. This is how it looks like if you didn't see that yet. This is the SRS Pro. So on the shorter view, as we enjoy the rally as planned from previous week, as you can see, the ABCD structures and trendline breakouts, or alternatively breaks above the most recent highs within bullish periods, as we see in the blue candles, and blue monitors provide us the buy opportunities. And basically a beautiful bullish turnaround, as you can see. In this down move, red periods were more stronger than the blue periods, right? More reds than blues. Then it started to change. More blues than reds, and then definitely more blues than reds. So all that provides us the buy opportunities on the shorter view. Also right now it's a very interesting opportunity, and we might see that on the beginning of the week, making this climb we just discussed about until the 4 hour would become a divergence. And how will we switch that from or back to the sells? On the longer view, you can see that the weekly is still bearish, right? And what could happen here is we basically turn, let's say, create this divergence, turn bearish. 4 hour will turn bearish as well within X candles, 6 candles, right? It's 6 candles of 4 hours is 1 day. The daily could turn bearish, and then basically on the lower time frame, which I presented before, what you will be able to see here, just remove it, it's a pop-up example here, it's a weekend, so nothing really currently is on, and on the lower time frame you would be able basically to see this turning bearish as well, and sell the rallies would become a very interesting opportunity. This is where the SRS will fit here in the trading conditions, and SRS candles will help you to spot that together with the monitor these opportunities. So keep an eye on the euro dollar. On those of you who own the SRS, follow this opportunity. They should be very, very interesting. Dollar Canadian was the next one. I expected to sell the rallies. So we got the rallies after the good news. Actually, bad news to the cat. And here we are. We got the rally, and now we are in a bearish and divergence. So what's next with this pair? As tempting and seducing it is to sell, and I still expect it to go down, the weekly starts to look suspicious with the hold here and tick to the bullish divergence. This is the place where it, what I call as lack of synchronization. We lose synchronization between the higher time frame and the lower time frame. I would definitely would want to see more price action to understand the picture clearer. As for now, as for now, this one is removed from the list and I go neutral. Euro yen was the next pair on the list, and the plan was buys, retraces and the buys, and that's what we expected, right? Turn around from these zones with the bullish divergence. Also, the Forex crystal ball was with us. Let's see what did we have with this pair. We had a hold, actually ticked a bullish divergence right at the beginning of the week, slightly above than the first zone, and then we delivered, the market delivered all the way upside until a new high was created. Now what happens with this pair is we are facing a bearish divergence, both from the 4 hour chart and slowing down on the daily chart. It starts to be suspicious. This is the time and the place where I go neutral as well. So the buys delivered. Right now we need more evidence to decide for next directions. I would definitely cover this pair in the shorter term opportunities in my live trading rooms and Traders Academy Club during the week, if and when the price action would deliver us a clearer structure, a clearer pattern. Euro pound sell the rallies was the next one. Want to see two waves on the 4-hour chart or a range for the sell. Euro pound here. So basically we don't have yet the two waves, and we are yet stuck inside a range. So the idea is the same. Sell the rallies would be the plan here, or break off the range would be bearish. Unchanged. Fortunately, this week was completely doing nothing for this pair. And that was all from the Forex. And before we go to the commodities and the next opportunities, let's talk about Forex new opportunities. Pound New Zealandian would be the first one on the list. I am aiming here for the longer run. We are in a bullish structure, and I expect this to continue further higher. Daily chart had nothing against on the rally, so my personal point of view, this is a correction and should continue further. Currently it's developing the two waves correction, so break above that, and I believe we will be exposed to continuation. On the lower time frame, as this happens, we might be looking for the higher highs, higher lows, bullish structure to start, and then expect the buys. Next one on the list is the euro versus the CAD. Triple descending cycle on the weekly time frame with a bullish divergence make me think we are in front of correction. Correction could be two waves or sort of a range. That means looking for the buys. Daily chart fit in perfectly with the false breakout that we achieved here. Actually, the second false breakout in a row. No higher highs yet. Followed with convergence. It might be created here if the MACD slightly spikes higher, and then it will be simply classical. The idea here is to buy retraces. I want to pay attention on a very strong candle pattern we had here. Basically top spikes in a drop followed with bullish divergence represent cash out of the sellers, then reversed with this beautiful bullish pattern with a lower tick represents bullish control. 4-hour chart is the one that should build the legs. You can see we had one, so corrections and buys would be the plan. 1-hour chart is the one that suggests the trending structure by making the higher highs, higher lows. So two waves in continuation should be the right plan for this pair. What should we be care of if we suddenly go straight move down and we cross below 61.8 of the Fibonacci of this movement? Then it would be simply warning sign, and we would have to step back and move neutral. And the last one of the Forex new interesting things I found is the Aussie Frank, which is resisting the zone of 61.8 and creating a bearish divergence. This is double cycle from the daily. Each of the legs here is a cycle by itself on the 4-hour chart. This one is obvious. The other one it's also obvious. The bearish divergence is screaming there. So I would expect retraces from this zone. And we definitely could see that trying to make some new high, but I would be looking here for bearish opportunities and corrections. 4-hour chart already had one false breakout, which is a good sign. Already start to create convergence principle, so I would not be surprised if slowly we would create this corrective cycle, aiming back to the 200 moving average or even lower. So that's from the Forex view. Now let's jump in the commodities. The rockstar of the commodities, a real rockstar, was the natural gas, where our invalidation plus was if we break below this trend line. But if we break this high, we are going to fly. And what happens with the natural gas was absolutely fantastic. We broke this high retested it, and boom, the continuation is amazing. So what's next with this one? I still expect for the longer run continuation. Short-term retraces are acceptable, and if they happen, there should be opportunities for further buys. So this one is simply fantastic and delivers a great profit. I hope you enjoyed this opportunity, and if you did, don't forget, hit the like button, show your support back and the work that is done for you and for the community. And for if you are still in the natural gas, let me know. How long do you plan to ride? Did you cash out partials? How do you manage if you trail the stop loss? Let me know what do you think about this one. Would be very interesting to hear your view, and thank you in advance. The less interesting one was the gold. Expectations was to get for a sell unless it holds the range, and then we're gonna high for a new high of the weekly. Currently nothing happens. The sell was kind of short term on during the weekly, and it didn't manage to deliver. Now we are back up again. From one side we're still holding the daily range. From the other side we still refuse to create any higher highs or anything like that. Clear zigzags, which unfortunately make it currently unclear, and that's why gold is currently moving to neutral. Of course, it might change during the week, and I will include it in the live trading rooms of Traders Academy Club. So you are invited. The links to join us is right below in the description. And the new one is the oil, which is very interesting. Oil, we had an amazing trading experience with that during the week on the day trading opportunities. On Tuesday I shared the video about sell the oil on the channel. If you missed it, right now on the right top corner of the video you would get a direct link to this video. You can also go to my channel and find the daily playlists, daily opportunities playlist. The view we had was this triple cycle from the daily, which I expected to reach to the 50%, and as you can see it delivered amazingly. We were trading that with the SRS on all these go down. That was the plan, sell the rallies. As you can see, every new appearance of red SRS candle delivered a great opportunity to sell. And on the lower time frames, as we trade during the week, as you can see, this one delivered, this one delivered. Every ABCD here delivered an amazing sell. So the oil with the SRS was simply amazing. Right now we are changing bullish, and the structure changed bullish. It becomes triple double with a bullish divergence and a break of the trend line, creating higher highs. So the biggest question is, can that fit in a bigger time frame structure? So during the week I didn't see any, to be honest, but right now I was analyzing it deeply, and here is what I found. This is a trending structure, bullish trending structure. That's the two waves correction. After the breakout, the oil continuously, right, create a higher lows, higher highs. Well, since this high and this low we don't really do much, but the fact is the last divergence from the weekly and the daily, in that case the daily here, it's bullish. We got a temporary stop with bearish hidden divergence, which corrected on the 4-hour chart and now breaking the 4-hour chart trend line. So watching on the weekly, the last divergence on the weekly is as well bullish with this hold. And in terms of structure, the bullish is as well a bullish structure with a bullish hidden divergence here. So I would not be surprised if slowly oil will start to climb further. Therefore, the way I see that, this is the breakout, right? As long as we would remain above this area and above this rising trend line, I would expect oil to start and deliver to the upside. Let me know, how do you see the oil? What do you expect from it? Up, down or nothing. And the last one on the list was the Ethereum, which did nothing during the week. So I'm not going to waste your time again. The same analysis remain relevant and active. And if you would like to, of course, to read more, then just go to the, or watch the previous week video, or check out the text format of the previous week forecast and analysis. Everything is available for you there. Okay? So that's all for the beginning of the coming week, the first week, official week of November. Very interesting to pay attention to the fact that the Federal Reserve cut the rates during this week's third time. And another interesting fact that the Fed said as well, no more unless we will see a real slowdown in the market. Now it's again Trump against Powell, Trump against the Fed. We just wondered, Trump against who isn't really against, right? So he is against everyone. So would be very interesting to see how this fact and the non-farm payroll numbers that were published on the last Friday would affect the market at the beginning of the week. I find November is a very interesting opportunities months, and I'm looking forward to see some great moves from the market. And I hope you will enjoy it with us. So thank you very much for your time watching this video. I hope you enjoyed it, you find it useful. If yes, your support back would be very much appreciated. Hit the like button, drop some feedback in the comment section. Feel free to share the video with anyone. It's completely free and open for the community. Hopefully it helps. And once again, thank you for your time. I'm Vladimir Ribakov from Traders Academy Club, and I wish you a fantastic weekend and a trading week ahead.